Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 12th of April. US earnings season kicks off. The US earnings season has kicked off and is expected to paint a gloomy picture about the performance of corporate earnings during the first quarter. Given the financial turbulence during the quarter and the collapse in commodity prices, the market consensus is for earnings to fall as much as 9%, led by suffering energy firms. This could halt the recent rally in US equities, especially if companies report even lower than estimated earnings, which would suggest that the global turmoil may have left a bigger mark than investors have priced in and could heighten risk aversion. In such a case, demand for commodity currencies such as the Australian dollar and New Zealand dollar is likely to fall, while the safe havens like the yen and gold could extend their recent gains. Even if we were to see further declines in US shares, though, the overall outlook of the stock market may not be that dire. The global environment has stabilized somewhat in March and early April, and therefore further setback in equity prices may provide renewed buying opportunities to investors who expect that these headwinds have dissipated or are about to. As for today, the European day is a CPI day. We get inflation data from Germany, the UK and Sweden. Germany's final CPI for March has already been released, and given that it confirmed its preliminary estimate, the reaction in euro was limited at this event. In the UK, both the headline and the core figures for March are expected to have accelerated. Given that the latest upturn in the CPI was considered temporary due to energy-related effects, an acceleration in the March figures could signify that the underlying trend of inflation has indeed started to move in the desirable direction and may add fuel to sterling's Monday rally. The market services PMI survey for the month showed that prices charged by service providers rose at the fastest rate in over 2 years, something that makes an increase in the CPI rate likely. In Sweden, both the CPI and CPIF rates for March are forecast to have risen as well. At its February meeting, the Riksbank cut rates amid fears that confidence in the inflation target may weaken from persistently low inflation. Therefore, improving inflation could reduce the odds for further easing, at least in the near term, and thereby may prove positive for SEK. The nation's PES unemployment rate for March is also coming out, though no forecast is available. In the US, the NFIB small businesses optimism for March is due to be released, but there is no forecast for this index. We have three Fed speakers for today: Philadelphia Fed President Patrick Harker, San Francisco Fed President John Williams, and Richmond Fed President Jeffrey Lacker. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.